Thank you for joining us. Today, we're talking to Paul Conn, president at Computershare. A quick note, of course, none of this constitutes financial advice, as none of us are financial advisors. So having said that, Paul, welcome.
Thank you, Pink. Great to spend some time with you and your audience.
Likewise. So I want to get right into the rights and benefits of DRS for retail investors. So in your last AMA, when discussing why DRS isn't a more commonly known investment strategy, you talked about how it's basically in brokers and banks' best interest to keep shares in street registration to provide market liquidity. Considering we retail investors have few resources to provide information counter to that, can you expand a bit on the benefits of DRS for long-term investors, such as the rights that DRS may bestow?
Sure, and thank you for the question. So the DRS, direct registration system, has been around for around 20 years. Many investors that are holding their securities through banks and brokers are holding directly with the banks and brokers through a nominee system at DTC. And I think many of your audience are familiar with that holding structure and the way in which they do business with banks and brokers today. The DRS system, by comparison, allows your audience to hold their shares directly on the register of the company in which they're invested without having to hold a share certificate. So they get the benefits of an electronic holding that's evidenced through a statement that is issued. The shares can be transferred to any broker through whom the party wants to transact. But the key benefit is the investor's name is recorded directly on the register of shareholders. So the company knows exactly who the investor is. They receive their dividends and annual shareholder meeting materials directly from the company. So that's really the key benefit. When you hold shares through a bank or brokerage account, you're holding your shares through an indirect holding system. So the shares are held in aggregate form by CD&Co on behalf of the DTC. The DTC is holding on behalf of individual banks and brokers, who in turn are holding shares on behalf of their clients. So when you're holding indirectly, the company may not even know who you are. So your account will be structured in one of two ways: what's called a NOBO, or a non-objecting beneficial owner. And that means your details can be made available to the underlying issuer if the underlying issuer wants to know who its shareholders are. By contrast, your account could be set up as an objecting beneficial owner. And in that case, even if the company wants to know the identity of the investor, the broker will keep those details private. So there are these different ways of holding the shares. When you hold them indirectly, the company arranges to pay dividends and distribute shareholder materials through the banks and brokers, and they can do that reasonably efficiently. But they're the key differences.
Okay, so moving on to listing the Computershare brokers and just talking about order execution. For shares purchased through the direct stock purchase plan, as well as any sales, it says on your website that you use various brokers to execute those transactions, and you're able to access those brokers in real time. Can you list those brokers for us and give us a quick overview of how client orders are executed with them?
Sure. Okay, so this is a good question, and we can see this question has come up quite a lot in the different forums and through Twitter and other online spaces, and even through our call center. We have different arrangements in different markets. The market that we're focusing on here is the US market, I think, predominantly for US equities. We are executing through Merrill Lynch, part of the Bank of America corporation. They affect almost all of our executions, whether it's selling on behalf of the investors or buying on behalf of the investors. So that's who we use, Merrill. In terms of how the transactions are conducted, we perform purchases on a batch basis, and the batch of purchases goes through our books into Merrill's once per day, normally around the opening of the market. So we'll have collected all the orders in from the previous day and we execute on that basis. When it comes to selling, people can sell and put a real-time order through the Computershare web platform, and we will route that order directly to Merrill and they will route it into the marketplace. You can also sell through a batch facility if you want to. I don't think that's the focus of your audience interest. They're interested in, I think anyway, based on what we've read, you know, how quickly can you perform a real-time trade? And that's how our systems are set up to electronically route orders to Merrill, and they route them to the market and they confirm the executions back to us.
Thank you. That does explain it. There's a lot of confusion about that in the communities, and so I appreciate clearing that up.
I hope that helps.
Definitely. And something else that you did clear up before, but I want to reiterate here is the difference between book versus plan. There's a lot of confusion online around this still. So as you discussed in previous interviews, the direct stock purchase plan describes shares that I buy through Computershare that you keep in a separate sort of custodial type account, which is different from book shares. Do I have that right?
Different from shares held in the DRS form. That's absolutely correct. So shares that are held in DRS are recorded as common shares on the register of the company. So they're held in pure legal form in the investor's name. Shares that are purchased through the plan are held in a subclass. So they are reported to the issuer just as if they were common shares, but the underlying shares are held in a nominee owned by Computershare. Those shares, however, can be moved between the plan and DRS anytime electronically, free of charge. The only reason we do this is purely for efficiency. When we're buying and selling shares, we need to deliver securities into the marketplace, so having them available in a nominee helps. So that's the way it's structured.
There's confusion about beneficial. Does that qualify as what they consider beneficial versus registered shares? So you're saying that the direct stock purchase plan would be considered a beneficial ownership situation?
You're recorded directly on the register of the issuer. The issuer knows exactly who you are, so you have that benefit. Technically, the common shares are held by a Computershare entity. We don't hold 100% of the shares that way. We just hold a number of shares so that we can perform effective clearing and settlement. But at any time, investors can move their shares between the plan and pure DRS.
Okay, thank you. That does clear up a lot. Listen, I want to talk about protocol for liquidity issues, because before you mentioned that Computershare is regularly testing for volume processing reliability and things like that, and that you did not see any volume or liquidity concern in the market at this time. Can you expand on what the protocol would be in the event that you did start to see cause for concern? Would it be up to your corporate client to report liquidity issues to the retail shareholders, considering that they have real-time access to this data, or would the message come from Computershare, so to speak? Okay,
so there are two pretty important issues wrapped up in your single question there. I'm going to try to unwrap them or unpack them a little bit. So when it comes to the reliability and the resiliency of Computershare's infrastructure or its platforms, we are regularly testing those platforms for volume related issues to ensure that we can deliver services as expected by our clients and their investors. So that's kind of the infrastructure we do regularly test that. I don't think we're anywhere near areas for concern at this particular moment in time. However, you also mentioned liquidity, and liquidity is something that is completely outside of Computershare's control. Liquidity is really something that's driven by the marketplace itself. So we may be able to route sell orders into the market through Merrill very, very efficiently, but there may not be any liquidity in the market if there are no buyers for those securities. So the liquidity really is a feature and function of the marketplace itself, and not really that of either the broker or Computershare acting as the transfer agent or even the issuer in this particular case. So I just want to keep those 2 points separate, if you don't mind, and hopefully your audience will kind of understand the difference between the two. The first relates to the provision of service. The second relates to whether liquidity is even available in the market at the particular price that people want to deal at. And, you know, it takes two to tango to get a trade across in a marketplace, of course. Okay.
So that kind of, it sounds like it would get an error if there was a purchase to try to take place or something, a transaction, and that liquidity were not to follow through.
I mean, I think at the end, probably putting it in its simplistic form, if someone put a limit order onto our platform, we would route that through the broker. It would get into the market very quickly. But whether there's a counterparty in the market to trade against that order, which is really what I would define as is there liquidity in the market, that's a very, very different issue. So if you have all buyers and no sellers, or lots of sellers and no buyers, there really is no liquidity at that point in time. It doesn't matter how efficient the infrastructure is that's servicing people. You need two parties in the market at the same time and to agree on prices.
It takes two to tango, like you said.
It takes two to tango, yeah.
Okay, so I want to talk about international customers now, because you improved the support a lot recently. Originally, the question was regarding whether you had plans to improve support for international customers, but you did just that, and you provided more phone support, a dedicated phone number. And I know you have a lot of grateful international customers. So can you tell us more about that and any other plans you have in the future?
Sure. Okay. Well, we have been listening to the commentary, reading the commentary online, and trying to stay apprised of the issues and the concerns. We can't necessarily satisfy every individual's concern about every particular matter, but you do pick up themes, and when there are themes occurring, you ask yourself, is there anything that you can do about that? So one of the key issues was really just for international investors making contact with our US contact center. And that was really one key issue that was coming through. Another key issue was, and still is, the time it takes for a piece of paper to leave Computershare and arrive at an international destination. We know that's taking time. So we've been working on a number of these issues. We did go live with the European-based telephone number, the special number, and people are now able to access that number during the European day, and that's certainly proven to be very popular with people. It's easier from a language perspective, it's easier from a time zone perspective, and it's easier for us, frankly, to be able to manage the calls that way once we can get our platform set up to do that. So we listened to the market, we tweaked our platform, and I think most people are pretty happy with that. The issue that's still outstanding is the one of mailing physical pins to people. We are working on that, and I hope in the new year we will have an answer to that. We're working very, very hard to kind of shorten the distance between Computershare and the end investor, and one of the ways we can do that is by printing and distributing documents from our facility in the UK to go from the UK out into the European environment. So that should cut down the length of time it takes. We're looking at some other longer term issues to streamline the process completely. We've had people asking us to do two-factor authentication. We're looking at that. We also continue to look at the limits, the $1 million consideration limit on transactions, and I'm hopeful that we'll make some progress on that in the coming weeks as well. So when we get into the new year, hopefully we'll have some further enhancements for you all.
really have been listening, sounds like. It sounds like you guys
Well, it's hard not to be perfectly honest. You can be quite a vocal group when you put your minds to it. So we understand that, and we picked up the themes, and we're trying to respond where we think it's appropriate and within our capability.
You've done very well. So we just want to reiterate again, it's really encouraging to see you guys listening and responding with to the feedback with improvements. And kind of going off of that, is there a streamlined way that you would prefer retail clients to provide feedback on their experience to you to see more immediate improvement like we just talked about?
Well, I would say we're just catching up with you all. Sorry, we have a little bit of feedback at the moment. We're just catching up with events of the last 12 to 14 weeks, or whenever this really started to catch on and people really started to talk about direct registration of shares. I know there's been discussion on this for a longer period of time, but it seems like around 12 weeks ago it started to really take off, and that's when we really noticed it, and people were calling us, and colleagues of mine were being called all around the world, and everyone was like, we need to do something about this. And so the way in which we did that was to respond through the FAQ process, which was really the only way an organization of our size can interact with such a large group of individuals who are dispersed all around the world, and to try and have some coherence to the messaging. So we were trying to listen from a thematic perspective and then push responses out through the FAQ process. I think we've got that, I would never say under control, but I think we've got a good rhythm now between the marketplace and trying to respond to these questions as best we can. We can't respond to all of them. We are happy if people want to email us if they've got a very specific feature or function they think is necessary that isn't being dealt with through the FAQ process. People could send us an email at memestock@computershare.com, and I'll make sure we email that to you so that you can include that in your materials. I need to make sure whether it's stocks or stock. I think it's stocks.
Okay.
But we'll tidy that up with you. But yeah, there'll be an email address. We can't promise that we'll respond to each and every email we get. But if someone's got an issue that they really think we should be addressing that isn't being addressed through the FAQ process, they could send us an email. It would be good if it would go to that email bucket. We'll take care of it from there.
Excellent. I did not expect a specific email address set up just for the meme stock. So thank you for that. That's awesome.
No problem.
So I had a question about how to improve the DRS process on our end, because like you said, the last 3 months has been, a flood. You guys have, I'm sure, dealt with a wide range of issues. Is there anything that the community can do on our end to help improve the DRS process? Common mistakes that are made or misunderstandings?
I think the biggest challenge we're all dealing with is to try and understand when a DRS instruction is actually given by an investor to its broker. That's a process that is completely invisible to us. We're only involved in, I'll call it the last mile for the purpose of this conversation, but we get involved once the participant in DTC instructs the DTC to withdraw the shares from CD&Co and to register you on the books of the company. So that's the very last step in the process. So none of us have any visibility about what's happening in the chain. So I think we all have to be a little patient there while people kind of work out how to make their own back office processes more efficiently. We are looking at whether or not there could be a solution where we get a copy of an instruction at the point at which an investor tells her or his broker to do the DRS, and we get some visibility at that point, and we could authenticate the shareholder at that much earlier stage in the process. So that might be an interesting enhancement for the future. That's still being kicked around at the moment. But I think really just to understand who is processing and who isn't processing, and recognizing that Computershare is only the last step in the chain, And when there are issues with moving shares through the DTC system, your first port of call really should be with your bank or broker, and they in turn need to talk to their counterparties within the DTC system to ensure the shares are actually DRS'd out into your name.
Excellent.
But everyone's getting lots of calls, so I think people are getting better at the process. At least I hope they are.
I think there's a lot more guides available online in the communities. There's just constantly new guides with new information as you guys update things. So it's a really nice symbiotic relationship that's happening right now that we're seeing all this unfold in real time. So
yeah, I think we're just on that. We're pretty amazed by the ability of your community and communities in general to aggregate disparate information and organize it in a way where it creates knowledge for individuals. That is really quite impressive to see. So we're all learning.
We are. We're all learning together.
Yeah.
So now shifting focus from professional to more personal opinion. I know that in a personal capacity, you've expressed some reservations about gaps in the U.S. market system and how you think there need to be changes to the way the market works. Do you think these issues are being addressed, and what else needs to happen?
Okay, so firstly, I'm probably not at liberty to talk about things that I've written in a personal capacity while I'm here as a spokesperson for Computershare talking about general kind of market-related issues. But to try and pick up on the theme of your question, I do think we've seen a situation where many people have different questions about how different parts of the market, trading, clearing, settlement, and registry system work. And from a personal perspective, I think even from a professional perspective, I think there are some gaps that do need to be addressed. I think some of those are being addressed, whether enough is being done and whether it's happening quickly enough, others will judge. But I think, in the areas of short reporting, the frequency of short interest reporting, I think is a key issue. I also think the key issue is of just how much stock in a particular company can be sold short. I think there's a debate to be had as to whether it makes sense for companies to have their shares shorted at more than 100% of the issued capital. I've been working in markets for 4 decades, and every time I say it, it astounds me. Although I have spoken to people in the market who think it's within the technical exemptions of rules and regulations. And I think ultimately when you have different parts of the financial framework that don't fit perfectly together, then it's up to the regulators and the major market stakeholders to sit down and understand how these things ought to work from a principles perspective and to make some improvements to close the gap. So, that will give you a feel for some of the things that I think will be looked at and should be looked at.
Thank you. That does. And thank you for sharing that. That's
You're welcome.
From someone with your experience. So, and going off of that, we were wondering how Computershare is involved in creating that positive change within the industry.
Well, Computershare plays an active role in market development. Sometimes that development comes as a result of new technologies coming on stream. Sometimes it comes through proposed regulatory or legal changes. And I think we will see, I suspect we will see some further changes to rules and regulations as we move forward. And Computershare is always looking at proposed rule changes and commenting on behalf of its issuers and their stakeholders. So we play an active role in that. We're sitting and waiting at the moment to see how some of these things unfold in the coming quarters.
Good to hear that you have such an advocate position for your clients.
Yeah, and this isn't something we're doing just as it relates to this particular situation. This is a core part of who we are and how we operate around the world. We have thousands and thousands of corporate clients, and in turn they have many, many millions, and I mean tens of millions of stakeholders, be they investors or employees. So advocacy is a key part of what we do, and we're known to many of the exchanges and the regulators around the world. So this won't come as some surprise to people that we take an interest in this area.
We're just learning about you, but it sounds like you guys have been at this for a while. So
we've been beavering away in the background for a while.
Excellent. So before we run out of time, I want to talk about just your overall thoughts on the DRS wave. I know there's been kind of an influx, like you mentioned, over the last 3 or 4 months. So I want to talk about what effect the so-called apes have had on things so far, and how the investment landscape is changing with DRS's newfound popularity.
Okay, well, we have seen a real influx in 1 or 2 securities. I think we will see some interest in what is DRS and how do we use it, and that will be a kind of broader perspective. How quickly that unfolds, I don't know. At the end of the day, this represents choice. It's not necessarily a binary outcome. You have one system or another. For 20 years, these choices have been available to investors as to whether they hold their securities in the street system or whether they hold them on the register, either through DRS or, certificates are becoming less and less popular now. But people can, they've had that choice from a systemic perspective for a long time. They just haven't realized they've had this choice because maybe they've not been aware of some of these other factors. So, look, I think we're at the very, very early stages of a discussion as to what form investors would like to hold their shares in going forward, and they should always have choice. I think that's really the bottom line.
Absolutely. And that's what a lot of us online are advocating for, is just for retail investors to have that individual choice of how we hold our securities, who's in charge of them, and how we access them. And then
you can make your own decisions.
Absolutely. So thank you. I want to say thank you once again to Paul and the team at Computershare for graciously providing us this opportunity to educate the individual investors around the world.
That's great. Thank you, Pink. Thanks for your time, and we look forward to continuing the conversation through various different channels.
Thanks, Paul.